The information I am about to share with you could serve as the defining line between constructing lasting wealth and witnessing your hard-earned money simply vanish before your very eyes. It makes absolutely no difference to me whether you are a seasoned veteran in the investment world or someone who is just placing their first dollar into the market. This message is relevant to every single one of you. We are currently marching straight into a financial landscape that is poised to severely penalize those who attempt to play it safe. When I use the word punish, I mean it will completely obliterate the purchasing power of anyone who is currently sitting on a pile of cash, believing they are making a smart move. They aren't being smart, they are being foolish. Now, before I dive into the granular details, I need you to take a specific action for me right this second. Go ahead and hit that subscribe button. Absolutely smash it, because the content I produce for this channel is specifically engineered to generate money for you, to safeguard your existing wealth, and to hand you the exact strategies that the wealthy utilize every single day. If you are not subscribed, you are actively missing out on critical data that could fundamentally alter your financial existence. So, make that click now. And while you are at it, hit the like button and leave a comment down below revealing exactly what percentage of your portfolio is currently sitting in cash. I need to know this because I can virtually guarantee that some of you are in the middle of making a colossal error. Here is the cold, hard reality. Cash is trash. I have been preaching this philosophy for years, but it has never been more accurate than it is at this precise moment. You might be under the impression that having your money parked in a savings account, earning 2%, 3%, or perhaps even 4% in certain high-yield accounts means you are doing just fine. You are not. You are actually losing money every single day. Inflation is devouring your wealth like a silent, invisible killer. While you sleep soundly at night, convinced your cash is secure, it is actively shedding value. The cost of everything, groceries, gasoline, housing, healthcare, is rising at a rate significantly faster than the interest your bank is paying you. Let me break this concept down into terms that are universally understandable. If you have $100,000 sitting in cash, and inflation is running at 5 or 6%, and take my word for it, the real number is higher than what the government reports, you are effectively losing $5,000 to $6,000 a year in purchasing power. That is real capital vanishing into thin air. Your bank statement might still show the number 100,000, but regarding what you can actually purchase with that money, you are becoming poorer with each passing month. This is nothing short of financial suicide. Yet I witness people committing it constantly. You want to know what really frustrates me? People approach me and claim, "Kevin, I'm just being cautious. I'm waiting for the perfect opportunity. I simply don't want to take any risks right now." I look them dead in the eye and tell them, "You are taking the single biggest risk of all. You are taking the guaranteed risk of losing money." Because that is exactly what holding cash represents, a guaranteed loss. At least when you choose to invest, you possess the opportunity to expand your wealth. However, sitting in cash is not being cautious. It is being ignorant. Now, I am fully aware of what some of you are thinking. You're asking, "Kevin, what about a recession? What if the market crashes? Shouldn't I keep cash on the sidelines, ready to deploy?" Here is my response to that. Yes, you undoubtedly need liquidity. Every investor requires liquidity. However, there is a massive distinction between maintaining strategic liquidity and hoarding cash as if you are prepping for the apocalypse. Strategic liquidity means possessing enough cash to cover emergencies and enough to capitalize on opportunities the moment they arise. I am referring to 3 to 6 months of living expenses, perhaps a bit more if it helps you sleep better at night. But beyond that safety net, every surplus dollar sitting in cash is a dollar that is unemployed and not working for you. Let me let you in on a secret about wealthy people. I mean truly wealthy people. They do not hold cash. They hold assets. They hold assets that generate income, and assets that appreciate in value. They own assets that work on their behalf 24 hours a day, 7 days a week. Real estate, stocks, bonds, businesses, commodities. These are the vehicles that construct wealth. Cash is merely the tool you utilize to acquire those vehicles. It is a mechanism of exchange, not a destination. If you are holding on to massive amounts of cash, you are utilizing the tool incorrectly. Here is what is occurring right now that should strike terror into the heart of anyone sitting on cash. Central banks across the globe have printed more money in the last few years than at any other point in recorded human history. When you flood the economic system with money, what is the inevitable result? The value of each individual dollar declines. It is basic economics, supply and demand. Too much supply results in lower value. Your cash is being diluted every single day by monetary policies that are completely outside of your control. You cannot stop it, and you cannot fight it. The only action you can take is to protect yourself by exiting cash and entering assets that maintain their value, or, even better, increase in value. Think about the situation in this light. If I presented you with an investment that guaranteed you would lose money, would you place your hard-earned savings into it? Absolutely not. Yet, that is precisely what you are doing when you hold cash in this specific environment. You are consciously choosing the guaranteed loser over potential winners. It makes zero sense, none whatsoever. And yet, I see intelligent people, educated people, and successful people making this exact mistake every single day. It drives me insane because they are actively working against their own interests. So let me explain exactly what you should be doing instead. This is where we transition into the actual strategy, the playbook that I utilize and that every intelligent investor uses to defend and expand their wealth. I am going to be incredibly specific here because I do not believe in vague advice. I believe in actionable steps that you can implement today, right now, the moment this video concludes. First, look at dividend-paying stocks. This is my bread and butter. This is where a significant portion of my own portfolio resides, and for very good reason. When you own dividend-paying stocks, you own shares of actual businesses that generate real cash flow. Furthermore, those businesses pay you every single quarter like clockwork. It is passive income. You wake up in the morning and money has been deposited directly into your account. That is the dream, isn't it? That is exactly what wealth looks like. Now, to be clear, I am not talking about speculative garbage. I am not referring to some tech company that has never turned a profit and likely never will. I am talking about boring, stable, reliable companies. Utilities, consumer staples, healthcare, financial services. I am talking about companies that have been paying dividends for decades. Companies that consistently increase their dividends year after year. These are cash flow machines. In an inflationary environment, many of these companies possess the power to raise their prices, which means their profits increase, which subsequently means your dividends increase. Your cash sitting in the bank is not going up, it is going down in real terms. But a solid dividend portfolio keeps pace with inflation or beats it entirely. Let me provide you with some real numbers here, because I love numbers. If you invest in a diversified portfolio of dividend aristocrats, companies that have increased their dividends for 25 consecutive years or more, you can easily secure a yield of 3 to 4%. But here is the beautiful part. That is just the yield. The stock prices also appreciate over time. So, you are receiving your 3 to 4% in dividends plus capital appreciation. Over the long term, we are talking about total returns of 8, 10, or 12% annually. Compare that to your savings account giving you 3%, while inflation runs at 5%. It is not even close. It is not even in the same universe. The second thing you need to comprehend is bonds. I know. Bonds are considered boring. Everyone assumes bonds are strictly for old people. But let me tell you something. Bonds are having a major moment right now. After years of historically low interest rates, we have seen rates spike. When rates are high, bonds become attractive once again. You can lock in yields of 5, 6, even 7% on quality corporate bonds and government bonds. That is real income. That is guaranteed income. And unlike stocks, bonds have a maturity date. You know exactly when you are getting your principal investment back. This is fundamentally about balance. You do not put everything into stocks, and you do not put everything into bonds. You create a portfolio that generates income from multiple sources and provides you with stability when markets get choppy. Here is what I do in my own personal portfolio. I ladder my bonds. That means I purchase bonds with different maturity dates. Some mature in 1 year, some in 3 years, some in 5 years, and some in 10 years. By doing this, I always have bonds maturing, allowing me to reinvest that money at whatever the current rates happen to be. If rates go up, fantastic. I will reinvest at higher rates. If rates go down, I am still holding bonds that I bought when rates were high. It is a strategy that smooths out the volatility and ensures I am always earning something. Your cash in the bank is just sitting there doing nothing, being eroded by inflation. The third pillar, and this is critical, is real estate. Now, I am not suggesting that everyone needs to go out and purchase a rental property, although if you have the means, you absolutely should. Real estate is one of the greatest wealth-building tools in human history. However, if you cannot buy physical property, you can invest in real estate investment trusts, or REITs. These are companies that own and operate income-producing real estate, such as apartment buildings, office buildings, shopping centers, and warehouses. When you buy shares in a REIT, you are essentially becoming a landlord without having to deal with tenants, maintenance, or any of those headaches. Here is the key. REITs are required by law to pay out 90% of their taxable income as dividends. That translates to massive yields, often in the 5 to 7% range, or even higher. Plus, real estate tends to appreciate over time, and rents tend to rise with inflation. So, you are getting income, and you are getting inflation protection. It is a double win. I cannot stress enough how important real estate is in a portfolio, especially right now. We have a housing shortage in this country. Demand is through the roof while supply is limited. That is Economics 101. When demand exceeds supply, prices rise. If you own real estate or REITs, you benefit from that dynamic. If you are sitting in cash, you are merely watching from the sidelines as property values and rents climb higher and higher, getting absolutely none of that upside. It is painful to watch. Now, let's discuss diversification, because I know some of you are worried. You are thinking, Kevin, what if I put all my money into stocks and the market crashes? What if I buy bonds and interest rates change? What if real estate values drop? These are legitimate concerns, and the answer is diversification. You spread your risk across multiple asset classes. You do not put all your eggs in one basket. A properly diversified portfolio might be 50% stocks, 30% bonds, and 20% real estate. Or maybe it is 40-40-20. The exact percentages depend on your age, your risk tolerance, and your financial goals. But the point is, you are not concentrated in any one thing. Most importantly, you are not sitting in cash earning nothing while inflation destroys you. When you diversify properly, you are building a portfolio that can weather any storm. If markets crash, your bonds and real estate help cushion the blow. If interest rates spike, your dividend stocks and REITs adjust. If inflation runs hot, your real assets keep pace. This is how you protect wealth. This is how you build wealth. And this is exactly what you cannot do if you are sitting in cash, paralyzed by fear or ignorance, or both. Let me tell you a story that illustrates this perfectly. Years ago, I met with an investor who had $3 million in cash. $3 million just sitting there in a savings account, earning basically nothing. I asked him why. He said he was waiting for the perfect opportunity. He was waiting for the market to crash so he could buy stocks at a discount. I looked at him and said, "You're an idiot. And I mean that with respect, but you are making an idiotic decision." You know what happened? He waited and waited. Meanwhile, the market went up 20%, then 30%, then 40%. He missed all of that growth. And even when there were corrections and small pullbacks, he still didn't buy because he was convinced an even bigger crash was coming. Fast forward to today, and he is still sitting on cash. That $3 million now has the purchasing power of maybe $2 million in terms of what it was worth back then. He lost $1 million by doing nothing. By trying to be safe, he guaranteed his own failure. Do not be that person. Do not let fear or analysis paralysis destroy your financial future. The perfect time to invest is always now. Not tomorrow, not next week, not when the market pulls back 5%. Now. Because time in the market beats timing the market every single time. I have been investing for decades, and I can tell you with absolute certainty that nobody, and I mean nobody, can consistently predict market tops and bottoms. The people who build wealth are the people who stay invested, who keep putting money to work, and who understand that markets go up over time despite short-term volatility. Here is what I want you to do today. Right now, as soon as this video ends, I want you to look at your portfolio. Look at exactly how much cash you are holding. If it is more than 6 months of living expenses, you need to deploy that capital immediately. Open a brokerage account if you don't have one already. Start buying dividend-paying stocks. Buy a bond fund or individual bonds. Invest in a REIT or a real estate fund. Just get that money working for you. Every day you wait is a day you are losing money to inflation. Every week you sit on the sidelines is a week you are missing out on potential gains. This is not about being reckless. This is about being rational. This is about understanding basic economics and acting accordingly. And let me address the people who are going to say, "But Kevin, I'm scared. The market feels high. The economy feels uncertain. I don't know what to do." First of all, the market always feels high to somebody. There is always a reason not to invest. There is always some crisis, concern, or geopolitical event that makes people nervous. If you wait for perfect conditions, you will be waiting forever. Second, uncertainty is the price of admission. If you want returns, you have to accept some level of risk. But holding cash isn't eliminating risk. It is just choosing a different risk. The guaranteed risk of losing purchasing power. I would rather take my chances in the market, where I have the potential to win, than sit in cash where I am guaranteed to lose. Now, I know some of you are still skeptical. You are thinking, Kevin talks his book. He is telling me to invest because that is what he does. And you are right. I do talk my book. But I talk my book because my book works. I have built wealth using these exact strategies. I have made millions, hundreds of millions, by understanding that cash is a depreciating asset and real assets are what build fortunes. If you want different results, you need to do things differently. If you want to build wealth, you need to stop hoarding cash and start investing in assets that generate income and appreciate in value. Here is my final challenge to you. I want you to commit right now to taking action. Not thinking about it, not researching it for another 6 months, but actually doing it. Take 10% of your cash, just 10%, and put it to work this week. Buy some dividend stocks. Buy a bond fund. Invest in a REIT. Just do something. Get off the sidelines. Once you do that, once you see that money starting to work for you, Once you see dividends hitting your account or your portfolio value increasing, you will wonder why you waited so long. You will kick yourself for all the time you wasted sitting in cash. Listen, I need you to do something else for me. If this video has opened your eyes, if you are realizing that you have been making a mistake with your cash, I need you to hit that like button right now. I need you to subscribe to this channel if you haven't already. And I need you to drop a comment below telling me exactly what you are going to do differently. Are you going to buy dividend stocks? Are you going to invest in bonds? Are you looking at REITs? Tell me your plan, because when you write it down, when you put it out there publicly, you are more likely to follow through. That is human nature. This channel exists to give you the real talk that nobody else will give you. I am not here to sugarcoat things or make you feel good about bad decisions. I am here to tell you the truth, even when it is uncomfortable. And the truth is, if you are sitting on a pile of cash right now, you are making a massive mistake. You are choosing to lose money. But the good news is, you can fix it today. You can turn this around and start building real wealth. The tools are available. The strategies work. All you need to do is take action. So stop making excuses. Stop waiting for perfect conditions. Get your money working for you. Your future self will thank you. Now go out there and make it.